Alright guys, welcome back to another brand new video, and for this week we are down $60 so far, with our biggest hit coming in on Wednesday, which was June 24th. This day alone we saw like a 3% drop, which was insane, but overall the whole week we are down. Today at least we are kind of trading a little horizontal. I mean, for the day I'm only down $1. We're down just 0.1%. So we are trading a little flat today, but the biggest loss did come from yesterday. So I decided to take full advantage of this day, and like I've been saying for the past few videos, I was really looking at Starbucks, and I finally pulled the trigger on Starbucks right down here. Today alone we're up 35 cents. I purchased one share at $72.66, which I believe I bought right around here, right when the market just bottomed and then it started to recover. But if we go over to some of its payouts, we can see this is going to be adding a whole $1.64 to my portfolio. If we look at its dividend history, it's just been steady growth. Now, a lot of dividend investors hold this in their accounts just because it's so reliable. The dividend is always growing. And honestly, Starbucks is not going away in like the next 10 years. So this is going to lead into the topic for today's video. So for those who are new, my name is Aaron Bravo, and I am a beginner dividend investor. So for those who are new and maybe wondering what dividends are, pretty much if you have a big company, let's take Apple for example, you make tons of money, you're very profitable and make a lot of capital. You're able to pay for your employees, your cost of running, research and development, and you're able to just generally expand and grow the company. And at the end of all that, you look at your balance sheet and you still have excess capital. When companies see this excess capital, they decide to reward their shareholders in the form of a dividend. So if we go over to Apple, we can see they decide to reward their shareholders $3.28 per year per share. This is going to be paid out quarterly, so every 3 months in the stock market at 82 cents per share. So that's pretty good. So this is the type of investing I really try to harness right here. All the companies I own in my portfolio are all generally dividend-based companies that have lots of excess capital that can afford to reward their shareholders. So there's other types of investing. There's day trading, where you buy and you sell the same day for a profit. There's also swing trading, where you buy and then you'll sell maybe in a week to 2 weeks. Then there's holding, which pretty much ties into dividend investing. And then there's options. This is where investors come on and you can trade puts and calls, pretty much deciding whether you think the market's going to go up or down, and you make a profit if you win. Now, I've tried day trading before, and I'll tell you, I lost, I think, $200 day trading in a span of about 6 months. Day trading is super hard and analytical, and it's very hard to time the market. So that's why for me, I have personally chosen dividend investing. I don't have to worry about waking up and constantly buying at the lows, timing the market, and then later on selling at a profit later throughout the day. All these companies right here are very profitable, and they all have that excess cash, that excess capital that they reward to shareholders. So whether the market is up or down, it does not matter, because all these companies are going to be paying me out in the form of a dividend on a routine scheduled basis. So with that being said, this is kind of my Google Doc where I've outlined every single stock that I own and ETF. I list it by its industry type, where I have what sector it's in, the amount of shares I own, the average price I paid, their annual dividend they pay me out, their payout type, and concluding their annual total for me. So if we scroll down here to the bottom, we can see if we add up the amount of dividends I am supposed to be paid out, I am at $43 per year. So acquiring Starbucks, and yesterday I also acquired half a share of Verizon. This finally boosted me up past $40, which is a big milestone for me. But next I would like to go over to this little graph I have here. Now, I started investing for dividends back in March, right when the markets hit the bottom. That's when I decided, all right, it's time to get in and it's time to try dividend investing. Day trading didn't work for me. Let's see how dividends go. And I started my YouTube channel back here in April when I made my first 31 cents in dividends. So I've only been active for 5 months. And as you can see from this trend line, as long as I'm funding this account and buying quality, long-lasting dividend stocks and great companies, this line should still keep going up. For the month of July, the dividends have already started to roll in, and I'm at $2.38, and that's not all of them. I know I still have my bonds, which is another 22 cents. This is going to put me at $2.60. Now, this is pretty awesome. Now, deep in the future, I'm really hoping to get this to maybe $100. That's a milestone. And then after that, maybe $300 and $500, and just enough to where I can finally survive off my dividends. And the future long-term goal would be to not work or not work as much and just really live off my dividends. But overall, the reason why dividends make the most sense for me is you can have your money sitting in a bank, and every month you're going to be generating interest. I know for me at Chase, in a savings account, per $1,000 you get 1 penny. That is terrible, and that's per month. This, look, I just made $2.38 in 1 month, and it's continued to grow. Even the 31 cents where I started at is more than the amount of interest I was getting on a savings account. Now you can point to CDs, but CDs are only going to offer you so much in a long-term contracted period. Your money is locked in for a contracted period. All this money in my portfolio, I can buy and sell, I can move around, and they're going to be paying me out more in dividends than they would in the overall growth of a CD account. This is true passive income, and my money just sits here. And it's pretty great because all these quality companies are going to keep paying me out on a routine basis, and I don't have to worry about the actual price going up or down, because this is what I'm targeting right here. And just to show you guys, this is just my overall portfolio pie chart where I list all my stocks with their shares and how much share space they take up in my portfolio. So my biggest holding is 1 share of ADP. It sits at 12.3%, and it takes up a pretty good chunk of my portfolio. And the last chart is my sector chart. So this is where I pretty much group up all my stocks, which are listed right here in their industry types. And I show that here in the form of a pie chart, which just displays the diversity of my portfolio. So while ADP takes up 12.3% of my portfolio right here as a single alone stock, it is also my only business stock in my business sector. So it takes up 12.3% here. But my biggest sector combined is actually going to be tech/telecom, sitting at 18.5%. And the reason why I have my tech and telecom so high is, like I've been saying, the tech industry overall grows at a faster pace than the overall stock market as a whole. So for me, I really want most of my money, probably around this 20% of my portfolio, in tech stocks, just so we can outpace the overall market. So back to the portfolio here on Robinhood. Like I had mentioned, I also did buy a share of Verizon during the dip. Now I only was able to buy half a share because I had put in $100 for the week. About 73 went to Starbucks, so I was only able to buy $26 worth of Verizon here. But I was able to buy half the share at my cost of $26.86, and I am looking forward to buying the other half, hopefully next week when I deposit some more money again, and maybe the market will take a dip. But that's going to be the video, guys. This was just more kind of an update, and I really wanted to bring it back to the basics. I really wanted to define what dividend investing was, why I chose dividend investing, look at some of the analytics personally with my portfolio and how it's going, and the overall growth and trend of where we're projected to go, and really promote how dividend investing is true passive income. And this is free money from excess capital from great big companies that are going to pay out and reward their shareholders. So that sounds good to you guys. I encourage everyone to get started and try out dividend investing. It's literally you just buy and hold and the money will come in. Of course, you need to look at the stocks. There's lots to learn. I have tons of videos showing how do I pick dividend stocks. So I thank you guys for watching. Leave a comment down below. Tell me what you think about the whole intro and a little bit of the editing. Trying to mix it up, trying to improve the quality a little bit. So leave a comment down below, like and subscribe, and we'll see you in the next video.